agree with everything you said. It's really a people business, and I think to be successful in it, you have to cultivate those relationships, and you have to value them. So we're really a relationship-based company. I think it's been over 50% of the reason why we've been successful. We do repeat business.
Yeah.
I would rather do 100 deals with you and be less greedy than do one deal and have it not work out or have a bad taste in both of our mouths and go our separate ways. So that's always been one of the keys to our success.
Hello, and welcome back to the Espace Montreal Podcast, a show dedicated to commercial real estate right here in Quebec. And today, it's a pleasure and an honor to have Mr. Ian Quint, the president of Brasswater, who is active in commercial, in retail, in industrial, both in Quebec and in the U.S. So, Ian, welcome to the show.
Thank you so much for having me. It's really a pleasure. Thank you.
Well, look, the pleasure is shared. I'm really happy that you're here. Everybody knows you here in Montreal.
Is that a good thing?
I think so. You've been very active, and why don't we jump right into it? So we just had the latest issue of Espace Montreal, the magazine that came out. We have a report on office and industrial. We call it the Office 50 report. And you mentioned the revitalization of downtown. At Brasswater, you have a very high occupancy right now, and I'd just be happy to hear about what made you so successful in your rentals in the downtown core.
I mean, I think in general across our office portfolio, not just in the downtown core, we're really focused on having the best in class assets. Mm-hmm. So I think we've paid the right prices for our assets where we can afford to give very competitive rents for a vastly superior product. So, my office portfolio is not gigantic, but I feel that in every municipality where we are, we really have the best product for the same rental rates. You brought up downtown Montreal. We don't have that much product in downtown Montreal, but I think that we have the best product. We bought the former Holt Renfrew building that I think you were referring to. So, in my mind, we have a different product than is offered elsewhere in downtown. It's very distinct from, the PVMs and the typical Class A office towers. Mm-hmm. It's very boutique. It's luxury. It has history. It has better amenities than even these large office towers. We have a spectacular rooftop terrace. I don't know if you've seen it. It's 10,000 square feet.
Whoa.
It's gorgeous. We have an outdoor park, and it's a level above, I think, anything else that's out there. And we were able to attract tenants because of that. And we filled up our office space from zero quicker actually than we filled up the retail space.
Okay, well, that'll be a good transition to that other sector. You do have quite a bit of office space in the Laval area as well. Has that been holding up? You're seeing good demand?
So it's been fantastic for us, honestly. Same theory. I think objectively we have the best office building in Laval, and we've had well over 90% occupancy, even post-pandemic. During the pandemic, we were accretive. We added office space. Actually, we never lost. And there's no secret sauce. We have the best product, and we're offering it at the same rent as anybody else, and we take care of it. So we're constantly renovating it. We just redid the lobby. We're doing every floor year by year. We're doing the common areas, the bathrooms. We have some exterior renovations planned this year. So, we have the best, and we constantly upgrade it.
Okay. Now, just switching gear, and we'll probably come back to office, but industrial has also been challenging. And personally, every time I drive on the 640, I look at the big piece of land that you have over there in Saint-Eustache. You've been quite successful, I think, with smaller buildings, multi-tenants, and you build on spec for that kind of properties. Are you continuing in that direction?
So I mean, first of all, vis-a-vis that site, it's about a 4 million square foot site. We have 2 million square feet of it spoken for, whether it's in build to suits or sales of land to users, which will all those constructions will begin in the spring.
Okay.
So we're happy about that. In terms of spec development, earlier in my career, I did a lot of spec development. Today, I don't have any appetite for spec development. I think it's too risky. So we're really doing build to suits for specific users and specific projects on the industrial sites that we have now.
Okay. And then for the rest of your facilities, have you been able to fill them up? I know like under 100,000 square foot, there's more demand. Again, multi-tenant. Above 100,000 square foot, are you seeing demand? Like industrial in the last year and a half has been harder. Obviously, the impact on the US and impact on manufacturing, some of the companies, wanting to weigh out that volatility. Have you been able to fill up your space?
So we've been successful. What you're saying is all true. It's not a secret. The 100,000 square foot plus, there's a lot of availability. I think someone told me the other week in the GMA, there's maybe 35 plus buildings that have over 100,000 square feet available. Mm-hmm. So that's certainly a challenge. And it obviously creates a race to the bottom in terms of rental rates. So, this landlord offered me this, you have to be $1 below, and everyone starts cutting their rent. So that's a challenge. That being said, not all buildings are created equally. Not all locations are created equally. So the better product is going to rent first. Granted, it's not as the same rental rates that it was last year or 2 years ago or 3 years ago, certainly.
How much, ballpark, how much of a decrease have you seen?
A decrease in demand?
No, in rental rates.
In rental rates, I would say for a good quality space and a good location, not a new construction, that the rental rate now is, if you really want to do a deal, is anywhere between $12 and $14. That same space could have been, $16, $16.50, $17 before. So it is quite dramatic. There, for the lower quality spaces, we see some landlords really pulling down their pants, and you could get deals in the $10 range. So that is a dramatic shift.
Decrease, yeah.
That being said, rental rates were, on average across the GMA, $6 for 30 years before that. And we're, even at $10, $12, we're still double what we were for 30 years. So, a guy that's owned his industrial properties since before the pandemic, he's still in the money.
He's laughing.
Yes.
Yeah.
So, and those are the guys that can afford to, on the way up, it was great. They were getting the $16, but they can afford to take $10, and it's better than having a vacancy. So that's generally what's happening now. You asked me, I think, a bit about what we're seeing in the demand there. I think we're getting more than our fair share of calls for the 100,000 square foot spaces. So we're actively dealing with 3-4 tenants for 90, 100,000 square feet now. But they are rate sensitive. That's for sure.
And the type of tenant looking at these properties, is it companies that are growing and need extra space? Is it relocations? Is it what's the profile?
So I would say it's a mixed bag. So some are companies that are growing and need new locations, or they're in older generation buildings and they want to upgrade, or they're lower clearance and they could actually take less space but with greater height. So it's really a mixed bag. I would say the one thing that I see in common with these tenants, and probably the reason why they're dealing with us, is because they're currently with landlords that aren't servicing them properly. So we have a lot of tenants that are looking to vacate properties because of the landlord.
It's interesting that you say that, because it kind of draws a parallel with also what you mentioned in a way on the office space, where now tenants are have higher expectations. And because the market is soft, they have that leverage over landlords to be able to asking for more service and for better quality for the same price.
Yeah, well, that in general is a problem with office. Even when you're successful and you have tenants knocking down your door, They know that they have bargaining power. The TIs that they're asking for, the landlord's work that they're asking for, is higher than it used to be. You have to pay commissions to the brokers on the gross. So these deals are very expensive deals to do, even when you're lucky enough to get a deal.
Yeah.
So that in general, I mean, it's always been a challenge with office space, even before the pandemic, that it's expensive to put in a tenant. And now I'd say the bigger change since the pandemic is it's expensive to keep a tenant. So, previously guys were exercising their renewals and that was it. Now they're saying, okay, I want a TI as if it's a brand new deal. Yeah. My broker wants a full commission or he's moving me to another building and I want landlord's work. Yeah. So it's the same package you have to give to a tenant that's been in your building for 10 years as a new tenant.
Wow. Yeah. So it gets expensive. Those margins are thin, and but technically it's always easier to keep a client than to acquire a new one.
100% in any asset class, by the way.
Yeah. Yeah. Now moving on, we've talked about retail. How during the pandemic, people were screaming that it was going to be the end of retail, the end of brick and mortar. We all know it wasn't true. And I think you've made quite a specialty of buying, I call them small strip malls in kind of odd locations, believing that you could be successful in repositioning them, which you have. It seems like that was a strategy that worked well for you.
Yeah, listen, our overall strategy is value add. So whether the properties are in Montreal or they're in Rouyn-Noranda, if we see a path to add value, we're interested in the asset. At the beginning of the pandemic, when people thought, okay, no one's ever going to go back to shopping, we thought we were going to take advantage and we were going to buy 10 million square feet of retail properties and be the biggest retail owners in Quebec, but it didn't happen. Yeah. Specifically for the stuff we're interested in, which is service-oriented centers, grocery-anchored, etc. Those fared very, very well during the pandemic and are still performing very well. So we weren't able to acquire as much as we wanted. Today, we're very actively pursuing retail, both here and in the US. We love the asset class. The demand is phenomenal. Our population is increasing, but the supply isn't really increasing.
No, we're not building much.
Even if you look at the past 8 years, we've built not nearly enough to keep up with the population growth. It's a combination of factors. The land is expensive, construction costs are expensive, and the rental rates just don't jive with it. Yeah. So for all those reasons, people are chasing retail. It's performing very well.
And when you assess some of those commercial properties, retail properties, what are some of the factors that are the most important? Because I've been driving around in northern Quebec and I saw this property is owned by Brasswater. And I was like, how the hell did they end up here? So I guess you're not just focused in densely populated areas.
No, again, wherever we see a market, a population, and a property where we can add value, we're interested. It's not my first priority to buy something in Mont Laurier, but I actually have to say I'm not picking on Mont Laurier, but my probably best performing retail asset is in Mont Laurier.
There you go.
So I have the enclosed mall there, but that mall is the center of the world.
Yeah. It's the center of commercial town.
Yes,
absolutely.
And the municipalities, the smaller municipalities around it. Yeah. And these guys, for the most part, even fashion, which we're not huge fashion center guys, even the fashion performs very well there because they're markets where people are, and they're not shopping online as much. No. So that was a great acquisition for us. It's maybe a little outside of what our general criteria are, but it performs well for us, and we would buy 10 more of those if we could.
Actually, if we dig into that property and that transaction a little bit, how did you source the deal?
That actually was an interesting one. There was I would say, a broker in his mid-90s. Mid-90s, who, unfortunately, the end of the story is, unfortunately, before the transaction closed, he actually passed away.
No. Okay.
But like a phenomenally nice gentleman who lived in a old age home in Westmount, but this guy was still hustling at 95 years old.
Kept them going.
Yes, somehow from 30 years ago, he had a connection with the owner of this mall in Mont Laurier. He came to my office. His daughter picked him up from his dialysis appointment, dropped him off at my office. We made a deal with this owner who built the mall in Mont Laurier, which was actually named after him. And we did the transaction. Unfortunately, the broker passed away before the transaction closed. But it was really just a coincidental, it fell into our laps.
Thank you for sharing this, because I always bring it back to it's such a people business, and it's those relationships.
I think every business, first of all I know is real estate. I don't know anything else, but from what I can discern, it seems to me like any business is about relationships and people. Yeah.
Yes, but I feel like real estate even more, because even though we're buying bricks and a roof and we're buying a box that generates revenue, we're dealing with people for absolutely everything, whether it's the tenants, whether it's on the financing, whether it's some contractors, and so it's all about those relationships. And especially for example, as you just mentioned, sourcing deals, maybe this broker would have brought it to somebody else, but no, he thought about Ian.
Yeah. Yeah, no, it's, I agree with everything you said. It's really a people business, and I think to be successful in it, you have to cultivate those relationships, and you have to value them. So we're really a relationship-based company. I think it's been over 50% of the reason why we've been successful. We do repeat business. Yeah. I would rather do 100 deals with you and be less greedy than do one deal and have it not work out or have a bad taste in both of our mouths and go our separate ways. So that's always been one of the keys to our success.
So before we talk a little bit about strategy, like you've now also migrated down south. I guess you either got tired of the Quebec Canadian market, or you just saw fabulous opportunities down south.
Listen, we're very active in acquisitions, so to feed our appetite, we had to we had to explore the markets. Yeah, I mean, listen, our pipeline in Quebec, which is still better than the average, is not as big as it used to be. Mm-hmm. So we're looking also now at opportunities across Canada, but certainly we've entered the United States, and we could look at 100 deals a day in the United States, sift through 100 deals to find the one best one. So instead of looking through 5 deals here and hoping one of them is good, and maybe it's not, we can really focus on the best of the best with the deal flow that we see there. We also we believe in the United States. So to compare it with Canada today, not to get political, whatever your political leanings are, whatever your opinions are on Trump, this man is doing the best he can to light a fire under the economy of the United States. So I like to invest in places where they're investing in themselves, where they're leading from a position of strength. They're bringing back manufacturing. We saw, I think it was yesterday or 2 days ago, Stellantis is moving out of Brampton to go to the United States.
For the Jeep plant.
Yes, and this is partially because of tariffs, etc. But the bottom line is, again, hate him or love him, he's putting in his best effort to drive the economy of the United States. And, that bodes well for the country and for real estate. From here, I think, unfortunately, it's the opposite. We're doing everything possible to ruin our economy.
And to drive business away.
It makes no sense. Yeah. And that's the reason why I'm diversifying into the United States. I mean, we can't even build a pipeline. it's amazing. We have $1.3 trillion in debt. Meanwhile, we can't even release a budget, and when we do, it's another deficit. It makes absolutely no sense. So for that reason, I think the future looks bright there, and we want to be a part of it.
And so, as you said, over there, you could sort through 100 deals a day and find some that are a lot more attractive than here when it comes to returns. Are you focused on particular asset class and locations, or are you looking at across the country? And a lot of investors are looking at Florida, Texas, but they'll stay away from California and they look at the Midwest. Like what's your states, locations, and kind of asset classes of choice?
So it's a very good question. So we're still fully focused on commercial there. So industrial and retail all our retail is grocery anchored, service oriented retail. In terms of our markets of choice, we stick to the markets where we're experts, and it doesn't mean we can't develop an expertise in other markets. But before we made our first deal in the United States, we studied it for 5 years. So today our expertise is along the East Coast and in the Midwest. So that's really where we're focused, and we're currently looking at other markets, but we're not ready to say we're expert enough to buy our first asset there, but we will. So today, that's where our expertise lies.
Okay, and so you've already made some acquisitions over there. Kind of like give us a rough picture of the properties that you have.
So we own about 4 million square feet in the United States. We own some retail in the Northeast, mostly in Massachusetts and New Hampshire markets around there. And our industrial is all along the East Coast, the Midwest, and Michigan. We have a couple properties that we bought that are industrial million square foot plus properties.
Wow.
One of which we bought completely vacant, and we were successful enough to have rented it all during 6 months after we acquired it.
Wow.
That was in Michigan as well.
What was the property, just to get a rough idea?
So this was an industrial property, 1 million square feet. It was being foreclosed on. We got it at a price per pound that we thought was very attractive, and we were able to offer attractive rental deals because of that. We subdivided it into 5 spaces and we rented it out. We wouldn't do that deal today just because the demand for industrial isn't strong enough to take the risk of filling up a 1 million square foot building. Today, we're more concentrated on cash flowing assets with upside.
Yeah. Okay, so for anybody who's listening, any brokers out there who want to send you deals, what's the buy box?
First of all, I would say don't be shy to send us anything. We look at everything, and it takes us 3 seconds to analyze if it's good enough.
If it's worth looking at.
Yes, if it's good enough for it. But we're really concentrated on grocery anchored shopping centers and industrial properties with cash flow with rents below market.
Okay, for anybody who's listening, take a note of that.
Send it our way.
Now, in terms of strategy, I mean, you've started the company, what, 10 years ago?
Yeah, 10 years ago. We just had our 10-year anniversyour.
Well, congratulations. It's a big milestone.
Thank you.
I mean, you've had tremendous growth and success. What are, in your opinion, like a couple of factors that propelled you so far? I mean, some investors, within a 10-year period, they might buy 3 properties. Like you bought millions of square foot in different geographies, markets, and sectors. You have something that works well. How did Ian do this?
Good question. I always say when I'm asked this question, the secret is that there's no secret. The secret is I worked like a dog, and I continue to work like a dog. And now, as opposed to when I started the company, I was essentially a one-man show. I have phenomenally talented people around me that are accretive and help me carry on this mission. So in a sense, it's become easier because I have a team that I depend on, a team that's fantastic. As I say, I don't do anything myself. Maybe the initial idea and production is mine, but then I have phenomenal soldiers that are executing the plan for me. So that's really my secret is hard work, and again, going back to what we discussed before, people, relationships. Yeah. So I do repeat business, and we source deals that way, we get tenants that way, and that's especially in a market like Montreal, that's become an industrial increasingly institutionalized, right? A lot of our product during the pandemic was, bought by the Blackstones or the Brookfields or, these big American funds and Canadian funds. Mm-hmm. There are few private landlords left that have significant portfolios in industrial Montreal that are able to give the personal service to their clients, and that's helped drive business to us as well.
Yeah, that's a really good point. I like what you said about the institutionalization of a lot of those assets in the last 10 years.
There's no one to speak to. If you have a problem, who are you, and they don't care. It's a job for them. They don't own the building.
File a ticket.
File a ticket. And the person that you're talking to today, if someone offers them $10,000 more, they're gone tomorrow to another institution. Yeah. So it's hard for the institutions. It's not their fault. It's the structure for them to form relationships with clients or tenants or brokers. The people are constantly changing, and there's just no personal relationship. So that's helped us a lot.
It's interesting you say that. I'm just making the parallel with on the residential side. A lot of the plexes, same thing. They're being bought by bigger and bigger groups, and it's the same landlords that keep acquiring, and there's really a concentration. So the importance of keeping those relationships is absolutely crucial, because otherwise it really depersonalizes and it really commodifies a lot of those services. Now, as we have just a few minutes left, what's coming?
I'm just getting started.
I know. I'm really interested. I keep going for a long time here. This was a warm-up. What's coming for the future for Brasswater? Like, you're a young guy. You've been going at it for 10 years.
I'm not that young anymore. I think I look younger than I am.
Well, you've preserved very well. Let's just put it that way.
Thank you.
What's coming? What's coming? When you come back 5 years from now on the show, and you'll come back way before that, what is it that you want to turn around and see that you achieved and be proud of?
So my first answer is what I don't look at. I don't look at how many square feet I have, how many properties I'm managing, what's the total value of my portfolio. None of that is important. Yeah. If you're doing things for that reason, you're doing things for the wrong reason, and you're going to make mistakes. Yeah. So it's not an ego game for me. I love what I do, and the reason why we're so active in acquisitions is because of our passion for real estate. But I always say, if there's 100 good deals this year where I can add value and I see a path forward, I want to do all 100. If there are no deals for the next 10 years, I will do 0 deals. Yeah. That being said, what are we working on now? Where do I see us going? We're expanding in other markets across Canada, and we do want to make a big push in the United States, and we're very active there for all the reasons that I said. I really believe in the mindset of leading from strength and doing everything possible to grow your economy, which they are doing. So we are going to be very active there. And we're working on, some bigger portfolio acquisitions now than just one-offs. So those are kind of what we have in the immediate to midterm for us. So hopefully they'll materialize, and when you have me back in hopefully less than 5 years, we can talk about those.
Yeah, and all, I like what you said about it's not about how many millions of square feet and stuff. Like at some point, once you've reached a point, all this kind of becomes irrelevant. It's a lot more about.
It's also nonsense.
It's the game.
It's also nonsense. Listen, we do it just like everyone else, but people they have an acquisition, they blast it on social media. Acquisition. It means nothing. All it means is you paid the most for the building. That doesn't make you good at your job. That's not adding any value. You should, what's the end result?
Yeah.
Did you execute your plan? Was it successful or not? Just because you have it and you're acquiring square footage means absolutely nothing.
Yeah, that's something to keep in mind. Some of the for some of them it's a lot of ego boosting, but that's not what it's about. That's not what the investing shows. And thank you for sharing your wisdom on that. I do agree that this should be just the introduction. We could keep going for another hour and a half. You'll have to come back, Ian.
My pleasure.
It's been a pleasure, and this is also just following the release of our latest issue of Espace Montréal, which, as I said, has the office top 50 and the industrial survey. I invite you to pick up a copy and let you know what you think. If you have any questions, the magazine is also available online at espacemontreal.ca. Thank you very much, Ian.
Thanks for inviting me. Thanks for your time. I look forward to the next one.
Yeah, this was really fun. We'll absolutely do it again. And in the meantime, as I always say, keep researching your market and make some offers. Thank you, and talk to you next week. Goodbye.